Welcome to this week, and what a week it has been. Holy banana bread. We got a lot of things to talk about in this episode. Lately, the news cycle has been spinning faster than a hamster with a very steroid pumped hamster running in it. Well, or a hamster wheel. I meant to say hamster wheel. That makes a little bit more sense. All right. So we've also had that. We've had a tax rate hike in the US. We've had market crashing, like totally crashing. Like we could build a whole bunch of $6 million mans from all of the market crashing. For those of you who are old enough to remember the $6 million man, we have the technology to rebuild him, apparently. Okay. And of course, we have what in the banana bread's going on with Elon. We seem to have that every week. Elon is always up to something, but this week, yeah, Elon is back at it again, and he is definitely up to something. All right, so before we jump into content, let's just say hey to the chat. Right now, I see SM Finance. Hi there, SM. How are you doing? SM Finance is currently creating a channel of his own. So that is going to be really fantastic. I think the channel might already be made. I'm not 100% sure. I'm not sure when the first video is coming out, but I'm looking forward to checking that out. So that will be fantastic. All right, so let's jump into some content right away as people are jumping in. Obviously, if you jump in a little bit late and you miss some of the content, just, go back and check it out. You can do that either after the stream, or you could even, if you're not really interested in talking, you can always just go back and be like 10 minutes behind real time if you want to. And then if there's like a really boring part, like this moment that I'm doing right this very second, you can just like jump ahead a little bit to get caught up. Anyway, let's get to the news. So the big story, of course, has been the rate hike. We knew it was coming. We knew that the Fed was going to be raising the interest by, 50 basis points, which works out to 0.5%. But in the workup, and we talked about this last week, in the workup to it, people were panicking. People were going crazy. And that just tanked our market leading up to this. And as those of you who've been following along, you'll have noticed on Wednesday when Powell finally spoke, everybody had a sigh of relief, because the big rumor at that point was that the next meeting in June, we would be looking at a 75 basis point increase. And that was kind of scary, but he allayed those fears. He said, we're looking at, we're front loading, but we're not looking at going above 50 basis points. So we're looking at probably another 50 basis points next month. That caused a little bit of relief in the market, and we began to get a rally, which is perfectly normal, because when these type of news events normally happen, we normally see a rally for about a week, and then it does tank again. The tank comes after it. But this case here, our rally was one day. It was quite literally Wednesday afternoon. Everything was green and looking great. But then came Thursday. Thursday was, we learned that little rally was We learned that little rally was just a simple blip. And when I say a simple blip, I mean, if you blinked, you missed it. That type of a blip. And Thursday, the markets went right back to, not being very nice at all. And that's kind of an interesting thing. So we're going to talk a little bit more, obviously, tonight about the market crash as we go along. But let's talk a little bit about why the Fed is doing what they're doing. So in raising interest rates, we are looking at trying to combat inflation. And I just noticed SM replied to me, said, yeah, I've got a few videos out now. I'm still getting used to the camera and trying to get better equipment. All right, I have to find your channel. I will watch your videos today there, SM. And Verena dropped in. Hi. I know Verena left me a question over on our Facebook page. I tried to get to it, but my Facebook wasn't loading. So I was like, well, I have to get to the stream, but I will answer your question tonight when I get over there, Verena. All right. Okay, so why they are doing this is, of course, we're trying to get our hands on inflation. We're trying to stop it. We're trying to get it tooled down. But there is a problem with that. The problem with that is that inflation, as you know, well, there's two different types of inflation. We've talked about this before. We've talked about, for example, the demand pull form of inflation. So with the demand pull, one of the issues that's affecting that is the fact that in 2022 in the US, they've created 2.1 million brand new jobs. So what that means is that demand is high because you've got a lot of people who weren't working before who are making money. What do people do who haven't had a job for a long time and all of a sudden they've now got a paycheck? Well, they go out and they buy the things they've been denying themselves for however long it was that they didn't have a paycheck. So that's one of the reasons that demand is staying high. Even with these interest hikes, you're not going to take a big chunk out of that demand because we've got people who've been denied for a long time who now have paychecks they're going to be spending. Now, the other issue, of course, is the cost push issue. And the problem with that is you're talking about supply chains and we're talking about the labor shortage. Here's an interesting statistic that I had run into. For every unemployed American right now, so everybody who does not have a job, there are two unfilled jobs for them. So get that, think about that for a moment. Every American who does not have a job, there's two jobs waiting to be filled for them. Why are these people not taking the jobs? We don't know. In some cases, some cases they may not be able to work. Other cases, it's a situation where there may be two jobs, but maybe they're not qualified for either of them. So employers are going to have to look at, well, to get us out of this mess, first of all, they're going to have to start hiring. They're going to have to maybe take people who aren't qualified and make them qualified, train them if you have to. So that's kind of that role that we're in when it comes to, the whole idea of trying to use rate hikes to just get rid of the inflation. It's not going to work very, very well. And we have Bleak in the house. Hey, Bleak, it's nice to see ya. So that's kind of the mess that they're in the US. And we're, of course, being north of the border, a lot of all of this filters up to us. Like our economy it's really not doing that bad. It's I guess the best word to say is that we could be doing a lot worse. And even the US is saying they've got demand, they've got people working. So when it comes to the whole idea of a recession, I don't think it's going to happen. It will eventually. I'm still thinking, but I'm not thinking this year. I'm thinking we're going to pull through. That's kind of one of those things. Even if we have a situation where, let's say the GDP is still in the negative for the second quarter in the U.S. Well, one of the key requirements for a recession is two negative, GDP quarters in a row. But they also still have to call it. There is a body organization in the U.S. that will call whether it's a recession. So it may be an unofficial recession, but if they decide not to call it because everything else is strong, we could still have that situation. It's unlikely. It's very unlikely, but it is a possibility that could happen. Now, Ron brought up a good point here. He says that many people are in their 50s and getting close to retirement and have just decided not to bother going back to work. And you know what? That makes absolute sense. If you're 55 and, during the whole illness, you put away a whole whack of money. You just squirreled it away and you were smart. You weren't one of those people who were on Amazon ordering something every single minute. Well, maybe you're in a situation where you can say, you know what? I've got enough resources that I can hold out until official retirement. So you may not, like in Canada, you may not have your old age security and you may not have your CPP yet. But if you were really smart with all that money the government threw at you, and you're frugal between now and 65, and some of those supports you can even take a little bit earlier if you really wanted to, that would give you some options. That would absolutely, and that would be one way to get you out of the workplace. Because especially if you're in a situation where if you've been working at a job that you absolutely hate, and people do this, people will work at a job they hate for forever. Like, let's say, for example, you were working at Burger King and you were like the morning person and you absolutely hated the job, but you just couldn't find anything else. Well, that's a type of job that you may not even be worth going back to if you think about it. So that's kind of one of the situations I think that a lot of people are in, that they're just not wanting to go back to, and especially if you're close to the end. Now, if you're like 30, yeah, you're going to go back to work. You may not be going back to that same job. You may be finding something different. I'll use myself as an example. I mean, I was working before the illness. I was manipulating photos in a print store. It was a selfless job. It was a pain in the butt, and I just decided I didn't want to go back. So what am I doing? I squirreled away money. I set myself up so that I have a buffer, and now I'm making YouTube full time. I'm not getting paid yet. I mean, there's a long road to getting paid to do this, but it's something I like to do, and I'm putting full-time hours in, and well, hence the reason that you guys are here, because it's all part of it. So I think there's a lot of people like that. There's a lot of brand new content creators out there that are here because they have the opportunity in the illness to sort of step back, take stock of their life, and decide, hey, I just want to, I just want to do something different. I want to do something I like doing, because, life is really short if you think about it. And something like an illness of that nature puts it everybody's perspective. It's like, if you've known people who died from this, well, first of all, my condolences. But second of all, that puts things into focus. That makes it easier for you to just sort of say, holy cow, why am I working at something I hate doing day in and day out and hating my life when that could then all be over in an instant? So that's kind of, I think, that attitude. It's moved in, and I think a lot of people have really opened their eyes to that, and they're like, you know what? I'm going to do stuff that I enjoy. And I think that's what life should be. People should be working at stuff that they enjoy, because when you work at something you enjoy, you're going to do a better job at it. Your passion is going to shine through. People are going to be able to see that you love what you're doing, and they will respect that, because that is fantastic. Now, KMV said that, yes, that's my plan. I like that plan. I'm going to take a sip of water. That's my plan right now. I need to get a little, I should record a little interlude that says, please subscribe to the channel while I'm drinking. Something like that. All right, perfect. So that was a little bit about the interest rates, and we kind of went off on a little bit of a tangent about, well, mostly about the economy and the job situation. And SM just he's just reiterating. And SM is, he's a young guy, but he has already picked up so much knowledge. So very true. If you don't enjoy your job, then you're basically just living for the weekends, which is 2/7 of your life. That's absolutely true. I think Loverboy had a song, everybody's working for the weekend. Anyway, well, once again, the younger folk are not going to get that one. Unless, of course, you're just like one of them young people who is like totally hip into 80s music, then you'll totally get it. All right. So that was kind of interesting. Now, I've got a whole bunch of little news bits too. One thing I wanted to talk about is there's a law firm in the UK. And what was their name? Stevenson Hardwood LLP. Now, with the illness, they let everybody work from home. That was fun and great. But now they're at the point where they're saying, okay, folks, it's time to come back in. And a lot of people don't want to come back in. So what they've done is they've actually said, and this is actually interesting. I was listening to, on CryptoNet in Canada, I was listening to Ryan talk about it, and about how if people don't want to come back in, they should take a pay cut. Well, guess what? This law firm is doing exactly that. Anybody who wants to stay and work at home is more than welcome to at a 20% pay cut. And here's their reasoning for this. Before the illness, they had two types of employees. They had their in-house employees, and they had a salary set up for them. And then they had their remote employees, and they had a different salary, a lower salary. The reason it's lower is that these people didn't have to commute into London, and that's pretty expensive, especially today with the price of gas. So what they're saying is people who were hired initially as in-house and now have decided they want to work at home, well, they're going to get the work at home rate. And that's kind of interesting. So we're at that situation where if somebody doesn't want to come back in, here's a company that's saying, well, okay, you're going to get paid less for that. So very interesting to see if that sort of, if that sticks and starts to come over to this side of the, I guess, the English call it the pond. I just call it big ocean. So it'll be interesting to see if that does filter over here. It's not a bad thing. Like, the advantages to working at home, one of them is, you do not spend a ton of money on all of the transportation and things like that. So I definitely think that should be an option. If a company can let you work at home, and if that company is wanting to pay you less, then that should be their prerogative to do that. And then you get to then make that decision. Are you willing to work at home if you're going to get paid a little less? So here's a question for you guys in the chat. If any of you guys are willing to work at home, but take a 20% pay cut, let me know. I would be curious to know if any of you guys would be willing to do that. Now, the friggin' Oracle has said I refer to the St. Clair River as the creek. Okay. And now that's probably funnier if I actually knew the St. Clair River, but I don't. All right, another little news tidbit that I brought with me here today too is Nova Scotia. So in Nova Scotia, they actually had their diesel gas. In 3 days, it went up by 34 cents. So a 34-cent increase in 3 days. And this is in addition to the way it works in the Maritimes is every Friday they have a price increase. And that's usually the only price increase for the week. But this time, nope. They had an 8.4-cent price increase on Friday, the previous Friday. And then it went up an additional 34 cents. So right now, and I don't know what people are paying for gas, but right now I know in Nova Scotia that they're paying $1.84 a liter, which is amazing. I know when I was living there, I remember at the beginning of the illness, it was like, holy cow, it was like 44 cents it went down to at one point. So, and even when I moved to Ottawa, I still think it was just shy of $1 or right around $1. So when I see that, that's huge. And it does level credence. There was a bank, and I don't remember which bank it was, but they had said that they expect energy prices right across the province, right across the country, to increase by roughly 50% over the 2022 year. Think about that for a minute. 50%. That's a lot of extra. That's a lot of extra billing. So when you hear, once again, and I keep referencing Crypto Night in Canada, for those of you here who do not know what Crypto Night in Canada is, that's a live show they do on Wednesday nights over on the Tim and Nancy Danter channel. There is a link in my extra information under Friends of the Channel down at the bottom. I'm a regular contributor on that on Wednesday nights. And a lot of times we do have a lot of great conversation about finance in general. So that's something to definitely check out. And if you haven't subscribed to the Danters, they're trying to get to 1,000 subscribers, and they've been trying for a while. So any little help any of you can give them, that would be absolutely fantastic. And Ron says, $2.23 per liter in Vancouver this morning, going to Washington State to buy gas. And that says a lot. That really, really says a lot. If you have to leave your country to get affordable gas, That's ridiculous. But I understand that the situation we have, like when you start to look at the gas that we produce in-house, you would almost think that, well, okay, we produce so much gas, why can't we have cheap gas? But the reality is, a lot of that gas, we're not doing a lot of that refining. A lot of that refinery stuff, a lot of that is happening in the States. So a lot of that gas gets shipped out. Also, a lot of it's under contract, sort of similar to what Nancy Danter was saying the other night about the farmers and how somebody may have a whole bunch of wheat fields, but somebody has already contracted all that wheat. So it doesn't matter if Canadians are hungry, if somebody from Portugal has already put the money down for that wheat, that's their wheat. So that's kind of interesting. We also have Scott DeRose in the house. He's saying, hey, everyone. Hey, Scott, welcome to the show. Now, here's another little news tidbit that I picked up as well during the week. So Global News, they did a survey on housing. And what they were trying to find out is they wanted to know if people felt that they still had a chance, or they still had a good shot at owning a house of their own. Well, here's the thing. Nationwide, 6 out of 10 people said, nope, we have no chance at ever owning a house. So that's 6 out of 10. It actually worked out to 63% of Canadians have pretty much given up completely on ever owning a home of their own. Now, the worst part of the country was, and Ron will probably get this, it was British Columbia. In British Columbia, it was just over 70% who said, no, there's no chance we'll ever own a home. And before the home prices got ridiculous in most of the country, they were already ridiculous in the really big cities like Vancouver and Toronto. I remember when I lived in Vancouver, it's like you could look at a house, and where I come from, Nova Scotia, it's a house I probably in Nova Scotia would have paid maybe 300,000 for, and you'd find out that, oh, they're selling that house for like 2 million. It's like, what? Why? It's just, sometimes it just doesn't make sense. I don't think I would ever be willing to pay, even if I had $2 million, I don't think I would pay $2 million on a house. That's just a reality. Now, that was the worst part, was BC. So the most hopeful people was a tie between the prairies and Atlantic Canada, where about 40% of people have given up. Only 40% have ever given up on owning a house. So, it's kind of sad that the housing market has gotten there. Now keep in mind, this is just a poll. So I would love to see this poll run. If we ever do have a burst in this housing market and prices start to come back down, I think it would be absolutely fantastic to run this poll again and see if these numbers change, or if people are now at that point where they just don't care when it comes to housing. So, and here's what the friggin' Oracle says. Yeah, he says, if I had 2 million, I'd have one built. Yeah, absolutely. Build the land, build the house yourself. It's almost at the point that if a kid wants to have a tree house in their backyard, they need $100,000 for it. It's it's kind of ridiculous that way. And what else did the friggin' Oracle says? Yes, gets shipped out, refined, and brought back in. Yeah, exactly. He's talking about the oil. So that's kind of thing. And Scott was mentioning a lot of Canadians hate the oil sands too, calling them dirty. Well, here's the thing, and we already talked to him. Let's talk a tiny bit about the oil sands. What people may not realize is there is an insane amount of research going on in Alberta to try to make oil cleaner. There's this whole thing called carbon capture. So, for example, if your industry is going to produce, let's say, and I have no idea what these guys produce. We're just going to say, let's say you produce 1 million tons of carbon. That's probably really high. But let's just say, if you're producing 1 million tons of carbon, what they want is a technology that you can offset that by also putting 1 million tons of carbon into storage. And that's kind of one of the things that they're looking at when it comes to the oil industry, is how they can offset the carbon that is being pulled out of the ground, as in hydrocarbons, by a carbon, storage or a carbon capture program. So I know I did a small contract with a company in Alberta out of Calgary called Alberta Innovates. And that's basically what they did. They basically they maintained a whole bunch of mostly data and coordination with different geologists who are working on that issue to see just to make sure. First of all, you don't want duplication of work when you have a whole bunch of scientists all trying to, figure out a way to, to capture carbon or to make things a little bit greener. You want to make sure everybody sort of knows what everybody else is doing, because then, if you make a small breakthrough that isn't really helping you, but maybe it'll help Joe over on section B. So it's kind of a neat little way that you can pass that information back and forth. So I think that's really, really fantastic. And it's always good to see something like that. All right, it's a 10-second sip drink. Okay. So that was carbon. Now, one other segment that we always have is one of my favorites. It's called What in the Banana Bread is Elon Musk Up to this week? Well, Elon is always up to stuff. Well, and a lot of it now it's all about Twitter. So by now you've all probably heard that he's been named the CEO of Twitter. So that's kind of interesting. He's planning to step into a very front and center role when it comes to Twitter. He's got a lot of interesting plans too. Now, what he has been saying is he has been saying that he wants governments and businesses to pay for their tweets. He's not saying he wants them to pay a lot. Like, he just wants them to pay a minimal fee. And I think that's just if you think of how many businesses use, a minimal fee probably adds up to a lot. So that's a lot of extra revenue for Twitter. And that makes sense, because I know he does want to make Twitter profitable. He's just from the valuation of his purchase, he needs to make it more profitable. In addition to that, though, and when I say businesses, if you're just a regular person using Twitter, you're not going to be charged. He doesn't want to charge the regular folk. He just wants to charge like businesses and governments for being able to get in there. And, this is a valuable source, a valuable communication tool for these businesses, for the governments. So they'll pay. There's no way around it. Now, in addition to that, he's also looking to, initially, everybody thought he was just going to pay for the whole thing himself out of pocket. So he's trying to find a way to not pay as much out of pocket on his own. So he's looking at financing it a little bit. There's even been talk about creating preferred or common equity in regards to the financing of Twitter. So that's going to be interesting. And there have been some companies that have stepped in and have given him a lot of money to move towards this. So it's going to be really interesting to see how this all turns out. Now, I know Bill Gates came out and said he doesn't think it's going to happen. He thinks that it's going to fall apart. But I've learned to never underestimate good old Elon Musk. So that's kind of that thing about Elon. And Scott's laughing at Elon. But that's cool. So that's what's going on with Elon this week. I mean, he's probably got other little things that he's done, because there's always something. And I'm hoping that he comes out next week. If he keeps on at least one good thing a week, then I can keep bringing him up, which is fantastic, because he's definitely newsworthy. All right. Now, I also wanted to talk about Bitcoin. And to do that, I need to bring up my Bitcoin chart. So give me a second here. I'm going to share the screen. And we're going to take a quick gander at Bitcoin. And let's put my head down there instead. There we go. Okay. So when we look at Bitcoin, I'm going to zoom in here a bit. We had this nice little channel. We had a descending channel. These channels are really interesting when you look at TA. And here's one of the things with Bitcoin. TA used to work pretty well on Bitcoin, but I'm finding TA becoming a little bit less reliable, other than some very big macro scales when it comes to Bitcoin. Now this chart, by the way, this is the 1 day chart. I don't like to really look at things less than 1 day. So if you can see this here, this descending wedge, normally what traditionally happens with a descending wedge is it will usually about 75% of the time it will break to the upside. And when it does, it usually returns to the top of the wedge. So that would have been 48,000. But this is not one of those times. This is one of that 25% times. And we've got a nice little break to the downside. And if you look at the wick on this very low one here, I don't know if I can get it closer. There we go, just a little bit. It came almost down to this blue line. And I'm going to just zoom out again. And this is that big line I've been looking at for a long time over Bitcoin. So we'll just take a look here. So ever since, this is a giant channel. It's one of these channels that has been going on forever. And hopefully I want to see this channel break eventually, because then I won't have to talk about it anymore. But it has so far held. So if this channel holds this current break, and we're going to come right back in a little bit closer, this current breakdown is not really going to get too much. It might wick a little bit below 33.5, but so far this channel has held with every single time we've had one of these issues. It tends to really, really, really hold. And I actually think it's probably there. I think my channel was moved a little bit. So it has been offering support. Now there's also another issue as well. If it breaks out of here, there is more support for it at 30,000. So between 30 and 32,000, we've got a little bit of a zone. I haven't put it on this map yet. So that's a little bit of extra support that may stop it. If it breaks below that and we get into the high 20,000s, there is something else that a lot of people haven't really thought about. That's Michael Saylor. Then we start getting into situations where MicroStrategy could get into some danger when it comes to liquidation. One of the things I heard Michael Saylor say is that they have a plan to not get liquidated. And well, hopefully they do, because that would be a disaster for MicroStrategy and anybody holding it. What I have heard, and I cannot substantiate this because I don't know what source I heard it from. But what I have heard is that Michael Saylor has a plan to purchase more Bitcoin if they start moving towards that liquidation part, just to keep that buying pressure on, just to prevent it from getting that low. So we are in a situation where I don't think either this is going to hold. If this doesn't hold, then I think the problem is that this support breaks out of this channel. It could be a bad break, and even that 30 to 32 might have a hard time holding things back. So if that were to happen, we could be looking at the high 20s, and then we'll find out whether or not this rumor of Michael Saylor's plan is true or not. I'm a little skeptical, but I'm also right now not concerned until it breaks. Once we've got a good confirmed day break, a full candle closing beneath this line, then I think it changes everything a little bit. Now, one of the issues, and I think this is the reason that technical analysis has been having such a difficult time with Bitcoin, is that, and I know Ryan's always talking about how it's tied to the S&P, and it's true. It's been doing the same thing as the S&P. So if the S&P keeps on falling, Bitcoin may stall at this line a little bit because of the resistance that's there. But if the S&P keeps going, Bitcoin will probably break through that line. And, once they invalidate that, then we have to sort of start looking at bigger long-term situations for what's going on with Bitcoin. So here is one of those things. When it comes to, is now the best time to get in? Or should I be waiting? And here we go. Ryan's saying that the NASDAQ 100 has the best correlation. There we go. So yeah, absolutely. So here's your question. I guess the question for everybody. When should we be getting in? Like if we want to get into Bitcoin, is now the time because it's falling? Or should we wait till we get to the bottom? Here's one of these things. Nobody knows when the bottom is going to be. I'm looking at this big TA thing, and I'm like saying, okay, well, yeah, the bottom should be here. Well, yeah, when I was looking at this TA, the bottom should have been here and then it should have went back up, but it didn't. So things do, the more you hit our line of resistance over and over again, and this has hit it, we've entered it here, we've hit this line 3 times, this will be like the 4th, eventually it will break through. That's just the rules. It's because this line represents a probability. So if you've got, let's just say you have a 25% time every time you hit it of breaking through, well, the first time you rolled, you may have rolled a 33, a 48, and a 75. We don't know. This time it might roll that 23 and break through if you look at it that way. But there is going to be a lot of pressure. You've also got, when you're looking between 30 and 32, you've got MicroStrategy's entry, you've got Tesla's entry. So there is a lot of resistance in there. It's going to be difficult to get down into the 20s. I think we may wick into the 20s. If we break out of this channel and we go right down to the 30,000, I wouldn't be surprised if it were to wick down to, like, say 28 or something like that before coming back up. But here's the thing. I was talking about when's the right time to buy. Well, I've seen many times Bitcoin can move really, really, really fast. When it decides that it is going to be time to turn around and it's going to go back up, because Bitcoin operates 24/7, it may happen when you're asleep. So you could easily miss it. So what I always say is look at creating for yourself some kind of a dollar cost average system. So if you're sitting here and you're thinking, okay, well, I think it might go down to 30, but I'm not sure, but I think it might. Well, if you're going to spend, let's say you have $1,000 to spend and you're thinking of investing into Bitcoin, well, maybe put 200 in here. And then if it breaks down, another 200 here, and then maybe another 200 here. And then if it turns around, and if it turned around and went fast, well, you've already got $600 that's going to be earning you money, and you didn't miss the entire thing. And you're not sitting there with $1,000 when you're like, oh, crap, I completely missed the bottom. So that's just one of those things that I certainly look at when it comes to that, because dollar cost averaging is really an incredible tool. Even if you're not doing a regular dollar cost average, if you're still at least dollar cost averaging when you're heading down into a dip, that's probably the most safest way to buy that dip, instead of trying to time the market, because timing the market, it never really works unless you just get insanely lucky. Now, Canada Bus Driver says Kitco had talk of Panama moving to BTC. Yeah, absolutely. That happens. And Ryan said that he started a DCA yesterday. I think it was a healthy price to start. No longer selling my free Shake Pay sats, just stacking now that the price is so depressed. Yeah, absolutely. And here's the thing. My system that I'm set up on right now. So I have I've got a MacBook Pro. It was almost $4,000. The last time Bitcoin was down at 3,000, I put about $2,000 on it, and that $2,000 turned into $4,000, and that $4,000 turned into a laptop. So keep that in mind that sometimes, and when I did it at 30,000, everybody was like, oh, we're going really, really low. We're going down to 20. We didn't go down to 20. But if we had gone down to 20 before going back up, I still wouldn't be upset. Like when we're back up someday into the 50s and 60s, you're not going to be super concerned like, oh, I bought it at 30. Oh, I got it at 25. It's only a little bit. So it's kind of one of those neat little things. But that's what's going on with Bitcoin, just to sort of put that into perspective for you guys. Because I know with the market looking the way it is, it's really easy to get caught up in the fear, uncertainty, and doubt. And that is, keep this in mind too. While you're caught up in the fear, uncertainty, and doubt, there's people like Warren Buffett who are just going, woohoo, it's time to buy. And he did. He actually made 5 big purchases over the first quarter as things were starting to falter. And one of them is interesting. I'll tell you about one of them that I thought was really interesting. Warren Buffett sunk a huge amount of money into Activision Blizzard. And When they were interviewing him about it, here was his response. He was like, I'm pretty sure that that deal is going through. Microsoft is getting Blizzard. Microsoft has agreed to buy Blizzard at $95 a share. So I'm buying in at, close to $80 a share. So that's basically $80 I'm turning into $95. And he put in billions, like he put in like a lot. So that's one of those things that you need to sort of pay attention to. And he does. Somebody like Warren Buffett, he is absolutely, oops, that one there. And Ryan picked up some Activision for that 20% pop. Yeah, absolutely. And that's a beautiful thing. Like you may not get that money right away, but you buy it, you sit on it, and you're getting $95 a share. So that is not a bad return on investment, and it's not even a return on investment that relies on the stock market. It doesn't matter how bad. I mean, heck, if the stock market were to get really good and Activision Blizzard went up above 95, well, then you would sell it, of course. But as long as it sticks around, stays in the 80s, you're making some money. So that's kind of a neat little thing. And Ryan was saying the ROI beats the market average. Given the closing date of the deal, serious no-brainer for people who trust the deal holds. Yeah, absolutely. And usually, and here's one of the reasons that the fact that Microsoft has already started sending some people over to Activision Blizzard and has already started talking to them about, how they would want to see things move ahead. That usually doesn't happen if there's a good chance of that deal falling apart. And I think that that's going to be a deal that will go ahead. So I think that's a absolute no-brainer. Whereas now last year when it came out that Rogers was intending to buy Shaw, I had questions about that right away. And I'm thinking there's a lot of hurdles that could get in the way of this deal. So when that Shaw price broke way up on that morning, like it was up for quite a bit, right? So it went zip up and I sold. I completely sold out all my Shaw right away because my thought process on that was that there are so many hurdles that could completely torpedo this that I'm going to take the guaranteed profits right now. And last I heard, they are starting to run into some issues in that Shaw Rogers deal. So I'm feeling better and better about that every single day. So just to sort of keep that in mind. All right, so that was Bitcoin. Bitcoin is doing its thing. Let me just get rid of that Bitcoin screen. I think the big lesson on this is basically just be patient, relax. Bitcoin will rebound. If some of these things, like what Kana said, like Panama moves to BTC, there is a lot of moves. When you look around the world, when you look at some of the positive things happening, you can almost come to the conclusion that the biggest reason Bitcoin is failing right now is because it is tied to the market. And that was really kind of interesting. And I'll tell you, as somebody who loves Bitcoin, when it used to follow the TA a lot better than it does now, I was hopeful that it would break its tie to the market and sort of become its own thing, but it hasn't. It really hasn't. And it will eventually need to do that. It'll need to be more followed closely as sort of a commodity, almost like gold. And that will, I think, make it a little bit better. And also will really help with the volatility on it. That was really clear. TA screen, love it. Yeah, that TA screen is tradingview.com. That's where you can make a nice black clear screen like that. So if you're interested in that, check out tradingview.com. And it's beautiful too because it will remember what you've done to the screen. So if I were to close that screen and open it back up again, it will remember it even though I don't have a profile set up on it. It just remembers where you were at. So it uses cookies to do that. So that's kind of a neat little thing. All right. Okay. Now I think that's it for the actual topics of the day. I think we've covered all of the the regular rigmarole that we have. I'm going to talk a little bit about what's coming up this week, and then if you guys got some stuff you want to talk about, just sort of bring that up, and we'll address all of that as well. So if you guys remembered last week on Monday, I did my 10 stocks. If I could only buy 10 stocks in Canada, what would they be? Well, now tomorrow I have got the same video, but instead of Canada, we're doing the US. So tomorrow it's going to be if I could only buy 10 stocks in the United States. And I have a plan for both of these two videos. So what I did, and the US has a lot more sectors available than Canada, but I wanted to keep things on equal footing. So I used the exact same sectors for the American stocks because I'd like to run the two of them against each other for a year. And then at the end of the year, we could even have like a little, I could even make a little almost an award show based on the two stocks, and we'll see which team won. So does Canada win? Does the US win? And what we'll base that on is just straight growth. So the total growth number for each would be what we would count that as. And then we can have like a winner for each sector, so does CN beat out whoever my American railroad, or well, may not be a railroad, it is a railroad, but whoever I picked for that one. And then we could have like an MVP for each team. So who did the best on Canada, who did the best on the US. So I think it's kind of really exciting. Also tomorrow, and this is cool, my first contest is going to launch. It's $25. So if you watch to the end of the video, there is some information in there to show you how to win some money. And I'm going to do it hassle-free, just the way, just the way I like it. So if you win, I'll just transfer you $25 over on the ShakePay Cash app. If any of you are here and you don't have the ShakePay Cash app and you're Canadian, because obviously I may have an American or two in here. If you're Canadian, you don't have the ShakePay Cash app, there's a link below in my extra information. Go down, grab the app, sign up for it, and they give you $10 for free. They give me $10 for free too. So you get money, I get money. Woohoo, we both can have a coffee, basically. It's like we're having a coffee together, if you think about it. And then quite literally, once you've got the $10, if you never want to use the app, just transfer the money back to your bank account and be done with it. But by having the app, anytime I do hold cash contests, you'll already have the app and you're ready to go. And it's just simple, easy peasy. So this will be in tomorrow's video. And I'm going to announce who wins the following Monday. So I will actually, because I script the videos on Saturday, I'll do the draw. We'll find out who wins. I'll contact them and we'll get some money over to them. So if you win, you get $25 from me. And if you don't already have the Cash app, you get another $10. That's $35. Amazing. It's like free money. I love free money. That's my favorite type of money. So anyway, that's going to be tomorrow too. And I'm really excited about that. It's one of these things I've been thinking about it for a while. And I was like, I just want to give you guys something. So we'll do that tomorrow. Now, when it comes to anybody who is not Canadian, right now, I've got it set up with cash. So tomorrow's contest is going to be Canada only. But I am looking, once I get my swag going, I'm going to be looking at seeing if we can get some prizes out to people no matter where they are in the world. Provided, they have like the internet. But if they don't have the internet, they probably aren't watching. So I'm not super worried about them. So that will be tomorrow. So that's going to be really, really cool. Thursday, I am going to be doing another company profile. Last week we did Enbridge. I've done large cap so far, so I'm probably going to be doing a mid cap. So maybe somebody you know of or you don't know of. So that will be fantastic and that will be cool. So I'm looking forward to that. And that's all coming up this week. And of course, I already mentioned earlier, there is that crypto night in Canada. I'm going to warn you right away. If you're you're thinking, well, you know what? I'm here for the stocks. I'm not here for crypto. we probably talk about crypto 10% of the time on Crypto Night in Canada, which is kind of funny. So I know both Ryan and myself have been talking to the dancer saying, hey guys, it's time to call it something different. I was mentioning they should call it finance and living or something like that. So I think that would be kind of cool. But anyway, definitely give them a support and just drop over there because it is a lot of fun. Last Wednesday night, gosh, heck, you know what? If you guys go over there, watch last Wednesday night's show. It was absolutely fantastic. It was like me and Ryan, we were just going at it, as we were talking about our stuff. And it was just absolutely, it was a lot of fun. Like I'm still excited about that show because that was really great. So definitely head over there, check that out, give them some support. All right, guys. So we got about 9.5 minutes left. So if you guys got anything at all you want to throw out onto the thing, let me know. Otherwise, I will just tell you a story. It's looking like I'm going to be telling you guys a story. Ooh, that was good water. All right. Let me try to think of something that would be kind of interesting. All right, I'm going to tell you the story of my trip to Florida because that's kind of an interesting story. So when I I guess I was a little bit of a writer. And when I was writing, I wanted to write a book. And I wanted that book to be set in Florida. So I had barely 2 pennies to rub between myself because I hadn't yet discovered investing at that time. So one of the things I used to do is I used to go online. I used to just, this was late 90s. Everybody was, all wrapped up in chat rooms. Chat rooms were the most fun things you could do. This one chat room I used to go into, I used to just go in there and help people out because I like helping people. So I used to go in there and help people out with whatever their issues were. And there was this guy there that I helped out quite a bit because he was having some issues with his girlfriend. So I helped him out. And anyway, I was in there one night and I was talking to my friend. She's like, oh, well, you can come stay with me if you want to live in Florida for the summer. And I said, yeah, I just wish I could get there. Well, this guy who I had helped out, he was like, okay, what's your closest international airport? And I was like, well, it's Halifax. And he says, okay, give me your address. I will FedEx you your tickets. Don't worry about it. This is all on me. So I'm like, okay. Now, I was naive. I mean, nowadays I probably would be very hesitant to accept something like that. Because he was going to pick me up in Orlando and drive me there. So, and it's about an hour drive. So I wasn't sure what I was getting into, but heck, you only live once. So I went off to Florida. And so he picks me up. And the amazing thing is he looked like, if you guys know who Scott Bakula is, this guy looked a lot like Scott Bakula. And I was just like, I kept staring. I was like, I can't believe how much this guy looks like Scott Bakula. But so I was, he was telling me about himself. And so he works for NASA, which is hilarious. So he was one of the guys on the team that developed the countdown clock for when the shuttle used to do launches. So that was just the most fascinating thing ever. So yeah, he drove me up to Gainesville, drove me to my friend's house. And he was like, here, he gave me a big wad of cash. And he's like, just so you have some spending money. I'm like, oh, okay. So, that was kind of how it was just dumb luck. It's one of those situations where if you think about when you do something nice for somebody, a lot of times it just comes right around again and, it comes back. And that was kind of, I've always lived my life that way. It's like, I try to be helpful and nice to everybody that I can and give as much help as I possibly can because when I need help, it's always there. It's just fantastic. When I need direction, it's always there. So if you take during the illness, like I said, I had just left a printer shop, just playing with images and, things like that. And I needed a direction. And, I discovered investing, and investing became my new passion. So, and it came at the exact right time, which is kind of neat. It's one of those things that, excuse me. It's one of those things that just happens to work out really, really well, and investing, I learned about, I think the person who actually piqued my interest, and this is kind of funny. It was Kevin O'Leary. just happened to be watching something on YouTube, and Kevin O'Leary was on there, and he started talking about investing. Before then, I had not really looked at investing, you know, and he was talking about something, and it made a lot of sense. And I was like, oh, this is incredible. I really, really need to start looking at this. And it's like, heck, the world's in lockdown. I've got all the time in the world. So I went into full study mode. And when I go into full study mode, give me a month in full study mode, and you'll think I've been, you think I've been living in that topic for like 20 years because, I'm very good at absorbing information and learning and growing. And so this just sort of became a passion. And then, I started learning as much as I could. I devoured a lot of YouTube. And then from there, I started trying to figure out, okay, well, let's start actually investing. And so I started looking, and I was trying to find, okay, what's a broker? I need a good broker. And, I was looking, and I found, well, first one I found was Quest Trade, and I was looking at it, and I was just like, oh, this doesn't feel as friendly as I'd like it to be. And then I found, it was actually Brandon Beavis, actually. It was one of his videos. He had one on Wealthsimple versus, I think it was versus Quest Trade. And I was looking at that, and I was like, oh my gosh, that Wealthsimple actually looks really, really cool. So I got myself all involved in the Wealthsimple. And ironically, I found Ryan when I was looking up more stuff on Wealthsimple. I had signed up with Wealthsimple. I was trying to master it. And I was doing some searches on YouTube on Wealthsimple. And, well, of course, back then, Ryan's channel was called, his Wealthsimple Challenge. So it came up. And that's how I discovered Ryan and met a lot of you guys. And, and since that helped inspire and push me forward into the point now that I'm, creating just a simple amount of I got a simple, straightforward approach to just getting this all done, and that's what I've been doing. So anyway, that was a tangent that came out of Florida somehow, but it's kind of interesting. And Jenster says hi Jenster, it is nice to see you. And Ryan says Wealthsimple is limited, but in the best ways. I'm so glad there isn't access to margin. I love Wealthsimple. Yeah, absolutely. Now, it's interesting. I mean, Wealthsimple keeps on growing. I don't see them doing margin. I think because of the overall danger of it, but I could potentially see them eventually getting into things like covered calls, but I don't see them doing margin. So it'd be covered calls without margin if they did get into it. And even then, that is complicated, and they do try to keep things simple. But if they ever moved in that direction, I would say covered calls, probably not margin. And KMV says, what a cool thing to happen. I wish I had been investing earlier. Better late than never. Absolutely. Because you know what? When somebody asks me, what's the best day to start investing? My answer is this. It's today. It's right now. A lot of people saying, oh, the best time would have been 20 years ago. Well, you can't access 20 years ago. So do it now. Do it this moment. Start now. Turn your life around. Then future you will be very happy with you. And Canon Bus Driver says, after hours Wealthsimple would be great. Yeah, absolutely. Absolutely. I would love to be able to purchase stuff after hours. There's really no reason for the stock market to not be 24/7. We've already seen that it works with crypto, and there are some commodities as well that you can also get full after-hour access, and as Rye's saying, even Robinhood has some after-hour access. So we do need that. It would be great because nothing, and this is the thing on a weekend too. Like today, I might run into something, and it's like, oh, I really want to buy this stock, and it just sucks that I have to wait. That I can't jump in there right now and get things moving or make any adjustments. So I would love to see 24/7, 365.25 days a year access to the stock market, because I think that would be absolutely fantastic. All right, guys, we are in the dying minutes. If you have not yet hit that like button, definitely hit that like button. Be sure to come back in tomorrow for my video and for your chance at $25. And if you don't have that Wealthsimple Cash, grab it now so that we can make it nice and easy to get some money over to you. And, and if you guys make this popular, I'll keep doing it because, I would love to start spreading some love back to the community. All right. Anyway, next week, hopefully we have lots of wonderful news. Yeah, we're always going to have wonderful news. Let's face it. The financial world is not, it's not one for stagnant information. So anyway, it was all fantastic having you guys here today. Thank you for coming along for this ride. We will talk to you next week when we get back to this week.